welcome Mr. Sanjay Mohotala, Chairman of the Board of Investment of Sri Lanka. Can you take us through the COVID-19 period investment inflow into Sri Lanka?
As all of you know, 2020 was a challenging year. There was no playbook for many companies to adapt and, of course, adjust to the curveball that was going into the COVID-19. But I think one thing that is very clear is that Sri Lankan companies always thrive in adversity, and that also helped most of our companies to be agile and take advantage of what happened in the geopolitical shifts, supply chain shifts in last year. So if you look at in terms of investments in 2020, I would broadly look at in two buckets. One is the capital formation, which is the FDI as well as the local investments. Secondly, it is about the pipeline that we were able to create last year in terms of future investments that will come into the country. So I think both of those are important when one talks about investments into the country. So if I talk about the latter first, in BOI, we were able to approve close to about $2.3 billion worth of projects last year. These are not FDIs, these are investments that we have approved, which is largely part of the FDI. Those projects will materialize over the next 1 to 2 years, some might be longer. The important thing is to have a healthy pipeline, which all would agree. Out of that $2.3 billion, roughly about $1 billion came for infrastructure. $450 million worth of investment approvals were given for manufacturing. Utilities sector about another $225 million, give or take. Apparel expansion, most importantly, about $250 million. Services about another 100, tourism about another 70. Now, one thing that's noteworthy is that the apparel, there were many new companies who ventured into PPE manufacturing, and thereby creating a new export vertical for themselves, which we didn't have in the past, whether it is masks, whether it is other PPE equipment that they got into manufacturing. The first part of the two things that I talked about is the capital formation. So, as you all know, after March, we went into lockdown. Many of the projects that were being implemented stopped. The global supply chain was disrupted, and most of our capital goods as a country we import from other countries. The supply chains were disrupted, shipping was disrupted, manufacturing capital goods were disrupted. So really getting that investments into the country, unfortunately, we had about 3 to 4 months of a push away, and we were not able to get that investment on the ground. Despite that, we were able to get close to about $700 million worth of FDI. This is realized FDI into the ground. This is assuming 3 months we didn't have much activity. Half of March was gone, 8 billion was gone, right? And in addition, BOI, we have both foreign companies as well as local companies, or some of the foreign companies who've been here after investing for years, they become local companies. There was another additional $700 million invested in Sri Lanka. So the important point is close to about $1.5 billion worth of capital formation happened last year on the ground. So that means companies were taking advantage of supply chain shifts. They were taking advantage of new opportunity that was created, and they put in the investments, or they realized the investments to take advantage of all the geopolitical shifts and the opportunities that was presented. So if you look at some of these numbers, roughly infrastructure leads the pack, then followed by utilities, followed by manufacturing, again close to about $500 million worth of investment on both FDI side as well as local investment out of the $1.5 billion. Still tourism, there's many companies who continue with their projects, given there would be a 2-year blanking of most of tourism arrival numbers and all that. And then importantly, the technology sector was picking up. HCL was a noteworthy investment that came in last year, and then many others were looking to follow. So overall, I think it's a story about driving in adversity. It's about a story about looking for a silver lining in a dark cloud. So overall, I would say the two key messages is $1.5 billion worth of capital formation. Of that, half of it was FDI. $2.3 billion worth of pipeline, FDI pipeline that was approved and signed. That means you get the benefit of this. in the next couple of years. So overall, I would say, given all the challenges, it was a good year for UI and Sri Lanka.
All right. So construction being the more the heavyweight, right?
Construction, meaning construction is a big element when a okay, let me reverse that, right? Uh, the question was construction was a big element, right? Is it?
Construction being the bigger component of FDI flowing in or investment coming in last year.
Yeah, infrastructure was a big element, and I think infrastructure will remain to be a big element going forward because we are in a country where about $4,000 per capita GDP, right? And the objective of the government is, bar COVID, is to double GDP over a 10-year period. So that means you're growing at 7 to 8% GDP, and we are a country around $4,000 per capita GDP. Yeah. So when you have a country around $4,000 per capita GDP, and then you want to grow rapidly, infrastructure do play a significant role in terms of both the capital formation, the expenditure, and also the impetus that is needed for economic growth. So yes, we would see a larger portion of investment into infrastructure, which is actually needed. And unless you do that, the countries won't grow rapidly. And case in point being, if you look at countries like China, because the government relentlessly invested in the infrastructure, the roads, the housing that was provided for the people, it's down to the private sector, it's housing and real estate and all that, hotels and all the other things. Those needs to come in. Unless that, the stimulation of the economy will come. So I would say infrastructure as a segment will be important and will be sizable in the next 10 years.
Do you have any specific bounce back plans? I mean, for 2021? Well, I know we are kind of into it now, no? The first quarter is gone.
When one talks about bounce back, I would look at in four buckets. The first one is making sure the existing investors can continue to thrive without any problem, right? So that's the first one. Second one is policy consistency as a country to make sure that the country attractiveness is. The third part is like ease of doing business. Once you come in, being able to do the business in a way that is conducive and useful. And then the fourth part of it is having certain sectors that we get the right investments and also thereby accelerating the growth in the country. So those are the four buckets I would look at in terms of bounce back. So the very first one, I think the most important thing is to make sure that the country gets back into our export trajectory of achieving 12 billion plus in terms of exports. Well, if you look at the first 3 months so far, we are on a good trajectory. We are in line to hit 12 billion. So this wave of COVID, I hope that we can manage it carefully so that the impact is minimized and we can hit the target that we set for ourselves. The second one is the policy consistency. And I think the groundwork for this policy consistency and making the country attractiveness happened during the COVID, right? To start with, the interest rates were brought down to a single digit. The first one. The tax rates were lowered to be one of the most attractive in the region. The budget gave a policy consistency of taxes that the taxes will remain the same for over a period of 5 years. Now, that's sort of a policy consistency or a bold step that most of the governments have not taken very early into the government's take. The second part, the fourth one is for certain sectors, very clear and attractive tax holidays was provided. Whether it was the upstream apparel, whether it is the pharmaceutical sector, whether it is the agri-processing, are two of those. Then, so that provides a good set of policy consistency, that provides a good set of attractive incentives for companies to come. Then the second part of this is about ease of doing business. So the ease of doing business, Honorable Nivad Cabral and UI, we are working together to get the country into the top 50. Now, it's all, as you know, it's a relative ranking. All the other companies are also moving with us, but we are pushing ahead very quickly to get to that top 50. How are we doing that? There's a whole legal reform that Honorable Ali Fadri is championing. There's a whole reform around tax payments, online payments, getting things online that's happening. Now, for the longest period, the customs and BOI, we were not online, document processing and all that. COVID forced us, and we were able to get and achieve that online service, being able to do the service online after many years. So there's a lot that's happening in terms of ease of doing business with legal structure, whether it is the custom regime, whether it is all the other aspects around tax payments and structures, clarity in the tax, and also working with approvals and getting approvals and all that. The third part of the last part of it is sectors, right? So in terms of the bounce back strategy, because it is not just bouncing back, but it's about getting the economy to where it needs to be. So in our strategy, we have outlined very clearly there are 5 cross sectors. In manufacturing, we are looking at pharmaceuticals, upstream apparels, electronic equipment. On the second one being ICT, we are looking at the whole pyramid, software down to back-end services. On tourism, with MICE tourism, infrastructure for wellness, and also thrill-seeking tourists to come in. For agriculture, which is really important because at the end of the day, 70% of the people either directly or indirectly relate to agriculture. We need to really make sure that our farmers do get a really high value or we get the right value for their produce. And agri-processing is an important thing. So there is that sector which is identified, and of course aquaculture and so on and so forth. So Ministry of Fisheries is doing quite a bit of work to release 3,000 to 4,000 hectares to be able to push aquaculture out, and then the last part of it is infrastructure. So coming back in terms of the bounce back, so there are 4 parts to it: making sure the investors continue to do the exports, making sure that we have a policy framework and our country attractiveness remains the top thing. Ease of doing business when the companies come here and set it up, and also allowing or providing them certain sectors that they could invest into, and providing underlying infrastructure, zone infrastructure, and so on and so forth, so that all together is the kind of the platform that we are creating for companies to leapfrog and take advantage of what Sri Lanka can offer as a good investment destination as well as a business creation.
Again, talking of 2021 Q1, do you have a number for me on how much in FDI has come in?
We just came out of 2021. Typically, our survey is only close to the end of April. Our estimation for Q1 close to about $200 million worth of FDI. I think we are very close to hitting that number. Typically, what we see is that Q1 is the slowest, Q2, Q3, Q4 is the ones that ramp up in terms of it's in line with the book closure of most of the investments we see. And I think the numbers that we have for Q1 is slightly above than what we planned for. So I think it's a good sign, and we hope that we will end up at a very strong footing by end of this year.
Do you have a target for 2021?
Absolutely. So most of the FDI, it's 80% of the FDI comes from the projects that are already on the ground, which are going through the implementation phase, whether it's 6 months, 1 year, 1.5 years, 2 years, in terms of the implementation period point of view. So we are expecting somewhere between 1.3 billion, 2 billion in terms of our FDIs for this year. We are pretty certain on the low end of the number, so we are trying to push for the high end of the number this year by enabling and fast tracking approvals and also necessary infrastructure build, so whether it is the electricity, the water, and so on and so forth, to make sure that the investors can put the money on the ground and quickly start the business. Now, all depends on how well, as a world, we take COVID under control. And I think with the vaccination and rollout of the vaccination, everyone expected things to improve, and beyond June to have a smooth sailing. But I think India has shown us that always there could be the COVID could throw a spanner in the workings. But fingers crossed, I think if everything's aligned, we will hit somewhere between 1.2 billion or more in the upper end.
Next question I have is there any specific sector that the BOI would target? I think you roughly told me, right, that it's infrastructure or construction that we usually do well in.
The fundamental way that the BOI look at is in terms of what's the value addition that brings into the country, and that will thereby contribution to the economy, and also ensuring that we have inclusive growth as a country. That is really important when you have a long-term objective or a 5-10 year objective of doubling our GDP. You want to make sure that the gap between the haves and the have-not is minimized as much as possible. So taking those two aspects into account, and also the geographical location and our inherent advantages, I have outlined 5 key plus sectors for our investment promotion. This doesn't mean that the rest of the sectors we are deprioritizing, but these are the most important ones. These are, I would say, the 10 poles which will lift the adjoining or supporting infrastructure, supporting subsectors as well. So, as I mentioned, when it comes to manufacturing, we are really looking at going and developing upstream apparel. Now, upstream apparel is about creating self-reliance in terms of some of our fabric needs. We import about $2.3 billion worth of fabric. What we're looking to is build our zone in Arahu, where many investors have already reserved land, to try to localize at least 500 to 700 million dollars worth of imports, thereby creating resilience. Also ensuring that our apparel industry meets the country of origin thresholds to uh, qualify for EU GSP or US GSP requirements. The second one is pharmaceutical. Again, as a country, when we're moving towards a knowledge-based economy or high value-added manufacturing economy, we need to get to that pharmaceutical quantity. It's not just drug manufacturing, but APIs, and also looking at manufacturing biosimilars and customized medications like lipid mRNA. The technology being out now with the vaccines for COVID, it's a new phase of drug development. And with our scientists here, it's something that we are looking to explore. And this is a sector that we need to really set the foundation for the next 5 to 10 years. It's not something that immediately will give fruit, but unless we create the impetus for $1 billion verticals in the next 5 to 10 years, we will never get to that point in terms of the country. And the last part of it is electronics point of view. Electronics point of view, because all of us are moving to Internet of Things, where we have devices and chips enabled things, whether it is a fridge, whether it is a microwave, and all that would be like enabled, technology enabled devices. So whether it is the circuitry, whether it is the software we develop on the chips, and also graphene based technologies. We have one of the best graphite in the world, and this graphene, as a result, here we can actually create a conducive environment to get companies to come and invest in these industries as well. The second vertical is on the technology point of view. If you take today, many companies, like many airlines run on code that is many stock exchanges, many boardrooms, many banks. So we are an island of engineering, as Lasman says. So we have companies who develop core software for many companies to try. Also, we have the back-end services for companies like HSBC, Accenture, and so many others in the country. So we're looking at moving from a 1.2 to 1.5 billion dollar IT-related vertical to 3 to 5 billion dollars with the startup ecosystem, but also bringing in much larger service delivery companies in the middle, and also develop our talent pool. And here was one of the facing points. Then it's about tourism. Our objective was to double or more than double our tourism revenue from 4 billion to 10 billion, barring COVID, over a 5 year period. For that, we really require a lot of hotel rooms, um, adjoining infrastructure, restaurants, recreational activities, other locations to visit, and so on and so forth. So all that ecosystem has to be developed, right? With all the hotels that's coming in Colombo, and the convention space and so on and so forth. The my stories of people coming for wedding and so on and so forth. When that comes in, so you need to create that ecosystem. So there's quite a bit of infrastructure that needs to be developed. Not just hotels, wellness resorts, restaurants, recreation and thrill seeking. I mean, options for thrill seeking travelers and so on and so forth. So all that has to be created. Then comes to agri. Agri, I think one of the most interesting ones is that take countries like Amsterdam, take countries like Israel. They really don't have the land mass, but they're one of the largest exporters of it. And Sri Lanka is one of those blessed countries, and I think there's a saying always that Moldaha itawa kalavenawa කියලා අතාවත් තියෙනවා පොඩි කාලේ. So whatever we put on the ground is actually growth. So we really have a big advantage of the agri opportunity here. Case in point being like when I made Roll, one of the largest banana and fruits manufacturers. They said like the Cavendish banana they make in Sri Lanka is one of the best. Why can't we have many more? The farmers will get more down, right? Thereby lifting them from poverty. They will spend the money in their village shop, or right, buying their produce, whatever thing they need, or to buy it from a kitchen, whatever. The livelihood goes. The multiplier effect in the money that's spent in the village is much higher. So agri is really important, right? When you look, we bring in so much produce, whether it is the lentils, whether it is the rice, whether it is the turmeric, and so on. So we can try to localize that. We bring in close to about $300 million worth of powdered milk, but we have 400,000 or to 600,000 families who have cattle. Maybe 1 to 2 cattle. They could increase the yield from 2 liters to 4 liters to 5 liters. By increasing the livelihood. So for us as a country, as BOI, we have to think about bringing in large dairies, thereby creating the medium size, but also to make sure that the smaller run of the country also comes into that pyramid, thereby lifting the entire population of the economy. And the last part of it is infrastructure, right? And I think many stories were written about and talked about when the gold highway was built, right? And I think, yeah, if you look at, I'm sure most of us will remember those. But if you look at now, many of the people who just go down the road and have nothing come back. And the question is that those kind of highways do create mobility, do create push out of industries which are just concentrated around Colombo to the further outreach. So thereby providing employment for people in these remote locations and so on and so forth. So the infrastructure needs to come in. The port infrastructure needs to come in. The warehousing, logistics, all that needs to come in. So I think that is also another vertical. So coming back, manufacturing, ICT, tourism, agriculture, and infrastructure. So those 5 sectors are the key sectors that we have looked at in terms of promoting and pushing Sri Lanka to get Sri Lanka to the different.
Under your leadership, have you made any changes at the BOI?
Many changes have taken place at BOI. And of course, to start all that, right, many changes have taken place and are in the process of taking root. The first and foremost is to have a clear strategy and a direction what is needed for the country as well as thereby our role as BOI. So I think that's what we spent last year in terms of developing that blueprint, in terms of the verticals that we need to build, and thereby how we need to go by as BOI. So that strategy, which is called the Reimagining FDI, was developed last year. Very clearly laid down 3 big changes in terms of country attractiveness, creating the conducive environment, and also ensuring that the existing investors are well taken care of. Then we looked at in terms of what we need to do in the organization, whether it's the capability of the people, whether the systems that we bring in, and the processes and so on and so forth. So we all the road had a 7-pronged plan to get to take the country forward and also make sure that the BOI is there to support that. In addition, I think recognizing the BOI's importance When allocating portfolios after the last general election, the BOI was retained under the regime, and it was elevated to elevated to a level and an organization that provides guidance to the economy and consumer affairs ministries. Then there was a cabinet subcommittee that was appointed to ensure that investment-related issues and also the policy changes that is required, which should be championed by BOI, is taken forward and creates a very big part. Then the important thing, the other part of it is the modernization of the BOI. So modernization of the BOI happens in multiple ways. One is that streamlining the services that we provide, that will be adopting technology, it will be adopting a streamlined process by the approval of things, and also getting a service mindset in terms of catering to investors. And I think if you look at the changes that we have gone through last year, providing those services during the COVID crisis, tough period, is, I would say, testament for some of the changes that talked about. In addition, some of the big changes that we are looking at in terms of the market focus is to really take Sri Lanka to the world. And one good initiative that we started with Chambers and Stock Exchange is the big investment conference that's coming up in June. Because at the end of the day, we need to have a consistent and a coherent message when we go to the world. So Chamber of Commerce, Stock Exchange, UI, and Central Bank are the four pillars of that. So we are doing these kind of conferences together to make sure that we bring the Sri Lanka to the world now. Secondly, we have already got funding to really think about really putting Sri Lanka's stand in the world, because unfortunately, if you look at the recent past, only negative news have been from the world media, certain fracas or situations around COVID or other issues. So really we need to think about how we build our image. So tourism is launching a global campaign to do so. Sri Lankan Airlines, similar to what we're doing. Then I think the important thing is Stock Exchange and UI needs to also have a view, a good image that will be portrayed. So I think for that is a global PR agency will do them. Then the important thing is the talent development. So there's a lot of emphasis we put into to invigorate and develop and coach and mentor and bring in the right capabilities for the UI. I think more than anything else, to facilitate all this, the BOI Act will be also amended in a short period of time to provide that baseline support to be able to get to the BOI. So if you think about changes, I think change should be the name of the game, because the world is changing much faster than what we have seen in the past. So as an organization who's in the forefront in doing all this company investments into the country, we have to be an organization that changes rapidly to cater to the needs of our investors. So change is here to stay, and BOI embraces change with open arms, and I think that's what we've been trying to do in the last 1 year. You hear much more changes that will really help our investors.
Thank you. One last question. FDI, they say, is 1% of GDP. Now, would you like to comment on this?
Well, indeed, I think if you look at the last year's numbers, yes, it's around 1%. Typically, it would have been around 2% if not. What we need to make sure that is we need to have efficient capital formation, ideally from FDI, which should be value accretive FDI for the country, so that the value addition of the multiplying effects of the economy takes root. So that number, which is about $700 million to $2 billion a good year, what I'm trying to do is to give the team to move to those to $3 to $5 billion. That is the capital formation and efficient capital formation is required for a country like us to grow and grow with the right momentum. Sri Lanka was a country who maintained close to about 4 to 5% or more GDP growth even during the war. There's no reason, with the kind of talent pool that we have and all the facilities, the stable government, and all the policies that we have in place, why we cannot grow at 7%. Of course, tourism will have a big part to play in that, but with the COVID coming under control, hopefully by next year beginning, we should be in that growth phase. So thereby moving in investments and increasing that percentage to 2% or more.
Right. Thank you, Mr. Mohtal. I think that about wraps it up. Thank you for your time. And